What are you seeing in the data that you at S3 Partners mine each day in terms of investors trying to position better for this inflation?
Sure. Thanks for having me back on, Matt. Always great to be here. We find really nuggets within our data. So if you look at the amount of shares bet against the S&P in the last month, up 20%. No surprise there. However, dig a little deeper. We like to find, fix, and avoid. That's what our data does. We go deeper and we start looking at the things that traditionally do well in inflationary times. Metals, mining, energy, real estate. Guess what? Short bets up against those sectors too. So a very interesting combination. Overall, short bets up. Sectors that are supposed to be doing well during inflationary times, up too. What does that mean? Stagflation. That's what the market is really saying.
Bob, maybe you can spend another minute just kind of going into those themes. I mean, in all your years of charting it out and watching where the short positions are there any comparable situations that you can think back to?
It takes someone like people at S3 that have been around and actually survived a rising rate environment and had to position their businesses to accommodate that. I think one of the challenges here is that most of the trading desks and most of the people managing money's been asleep for the past 20 years. It's woken up, it's striding like a colossus across the financial markets, and people don't know what to do. That's what's happening. The volatility you're seeing is that people have to recalibrate. Well, what does inflation mean for them? And that's what's causing the volatility.
I mean, people are going to recalibrate. The Fed, though, is still adding accommodation. At some point, we assume they will stop and even reverse course in that sense, quantitative tightening. When they take that liquidity out of the system, what does that mean for the frothy meme stocks that we've seen go crazy in the past year, like an AMC, like a GameStop?
Yeah, our squeeze score has become the actual metric for who's winning and losing in those battles. So earlier on in the year, our squeeze score is at 100. The Reddit crowd, retail winning. 3 months ago, institutional investors kept their short bets. They started winning. Squeeze score went down to 25. Now we see our squeeze score ratcheting up to about the mid 80s. And we find that the crowding score also approaching something worrying. So if you look at that squeeze score, you'll see who's winning and losing in the battle between hedge funds who think AMC and GME are just, dead men walking, and also the retail crowd that just believes, hey, you know what? If we just gather enough force together, we can squeeze the shorts out. It's a great financial soap opera, and the Fed taking the money away is not going to end it.
And Bob, what about the battle taking place under the hood with some of these other corporate stories we've been talking about recently? Peloton comes to mind. We've watched all the headlines, a lot of big changes at the business. But in terms of those daily swings we've seen in the stock, what do your numbers and data tell you?
Yeah, Peloton's a very interesting one. I think what the shorts are really saying, stock's up, like 100 and something percent over the last 10 days. What the short sell is actually saying is we don't believe the takeout value of the stock, if someone's there, is going to be above where the stock is today. And most of the time we've seen short sellers not covering at all. That means they're still very negative on the stock. They don't think there's a buyer.